Hi everyone, this is Nageen. I'm the CEO and co-founder of Digitap. So today, the topic that I'm going to present on is how do we use alternate data, right? It's some of the points that we just covered in the fire chat as well. How do we use alternate data to underwrite customers, and how do we provide confidence to our lenders that they don't have to just use the bureau score to underwrite. There are also alternate means of underwriting your customers without increasing your risk levels, right? So before we do that, I mean, just a little bit of a context in terms of who we are, what Digitap is. So we are a company that's 5.5 years old now. We've started in 2019 November. We operate predominantly in the BFSI space. We are a company that provides a lot of API and SaaS-based solutions to companies in the BFSI vertical. We currently work with about close to 400 plus clients, and we have about close to 200 plus APIs that a lot of these BFSI companies take from us. Right? So what is it that we do? We provide solutions in predominantly two areas, two verticals, right? One is on the onboarding side of things. So we have a lot of solutions or APIs that our clients use to digitally onboard customers, right? Either in their journey of onboarding a customer for account opening, or for providing any, or for taking any loans, or taking credit card, right? So we have a lot of onboarding solutions. We currently a lot focused on the onboarding of individual or retail customers, as we like to call it in the industry parlance. However, we do have some solutions for onboarding of B2B sort of businesses as well, right? So you can see there we have solutions around OCRs or KYC and identity verifications. We have solutions for business verification, where you would want to onboard a business for opening of a current account as a use case. Then we do provide a lot of verifications of the business documents as well. We also have solutions around online signing of documents, some solutions around payments, which are also used for the repayments of loans, and some payment-related use cases there, and bank account verifications, where some of our clients would want to verify the bank accounts before they digitally disburse the loans into the bank accounts of the customers, right? So the second vertical that we operate in is the alternate data suite. So that is the vertical which is actually gaining a lot of traction nowadays in the BFSI space, especially in the lending sector, right? How do our clients underwrite customers who don't even have a bureau score, right? They are new to credit. Or how do our clients underwrite customers? How do we help them underwrite customers who have a very thin file in terms of the bureau, right? We typically depend on 6 to 7 different data points, as I was mentioning in the last session as well. So we depend on employment. So we provide our clients with data around the employment of the customers that they are onboarding, whether they are actually salaried, I mean, to which company are they employed with right now, and things like that. We provide them with a lot of information around mobile enrichment. So just on the basis of the mobile number, we give them certain data points that will help them in terms of, again, underwriting their customers. So we do provide a lot of validation of the mobile numbers, mobile to pre-fill APIs and all that. We do a lot of bank statement analysis that gives them a lot of information in terms of what is the financial profile of their customers. We do a lot of risk modeling. So just by taking the mobile number and other PII information of the customers, how do we build alternate risk modules to underwrite the customers, right? We also provide them with a lot of data around the e-commerce spends of the customer, and how will that, again, tie back to whether that customer is creditworthy or not, right? So we build models around that. We build models around the device data of the customer, whether the device is having any fraudulent behavior, or what sort of SMS transactions are happening on the device, and things like that. And finally, we also look at what is the online presence of the customers that are coming onto the platforms, right? So whether that customer has a Facebook account, whether that customer has a WhatsApp account, and if he doesn't have, then what is his probability of default? If he has, then what is his probability of not defaulting and things like that, right? Some other solutions that we also provide, we also are a TSP in the account aggregator space, so we actually provide a lot of solutions in terms of bank statement analysis by pulling the bank statement from the account aggregator ecosystem as well. We have a multi-AA approach that gives us the best success rates in the industry right now. And we've also built a platform which takes data from the account aggregator and as well as the financial SMSs that are present on the device of the customer and build a predictive engine, right? So what that engine does is it not only tells if this particular customer is credit worthy or not and how do we underwrite this customer and what is his riskiness score, but that particular platform also gives certain insights to our clients in terms of how do we cross-sell and upsell to that particular end customer, right? And once you have provided certain credit products like a loan, it also gives some insights in terms of how do I monitor that customer, whether he'll repay the EMI or not and in time and things like that, right? So these are some of the use cases that we are building using that particular platform as well. So now coming to the topic at hand, right? So this is an interesting anecdote where this was put up by Nageen Kommu, right? So the founder of Zerodha. We all know what his net worth is, but apparently when he tried to check his CIBIL score, it came up to 747, right? And CRED app doesn't allow customers who are less than 750. So this was a dig by Nageen Kommu saying that, you know what, am I not good enough to be on the CRED app, right? So these things happen. These things happen with your bureau scores. Now, if you were underwriting totally on the basis of a bureau score, I mean, Nageen Kommu would not even be your customer, right? And you wouldn't want that. So what are we missing, right? Basically, again, if you rely just on the basis of the bureau score, right? These are some of the problem areas that you'll have. You'll never be able to underwrite a customer who doesn't even have a bureau file. So he's new to credit or he has a very thin file, right? Bureau and income data, they only cover a part of the story, right? There are different ways of customers defaulting in today's world, especially when they are digital customers, that sometimes the bureau data is not up to date, or it takes time for bureau to update their data to give you the accurate information saying that, you know what, this customer might be a risky customer, right? And if you rely just on the bureau, right, it is not giving you any new insights, right? I mean, if a client X or a bank X is underwriting on the basis of bureau, a bank B also will get the same information as what a bank A is getting, right? So then how do bank A differentiate itself from bank B, right? So there is need for them to rely on other sort of insights about that particular customer, and rather than just focusing only on a bureau score to underwrite the customers, right? That is where your alternate data fits in, right? Like, what does alternate data provide you, right? So if you look at right from the bottom here, so it gives you a lot of pre-screening ability, right? So even before you get to run his bureau scores, there can be some very apparent risk signals that you can pick up just on the basis of his mobile number or an email ID, where you then say that, yeah, you know what, I will reject this customer and I don't even want to move forward, right? I might as well save on the cost of running a bureau check on this particular customer. It provides you with a lot of supplemental data to your bureau scores for you to then take a better underwriting decision, right? And what I mean by better underwriting decision is not always a go, no-go sort of a decision. It can also be decided to say that, you know what, this guy has this bureau score X, but when I actually looked at his alternate data, I strongly believe that I can upgrade this customer. I mean, I have decided initially just on the basis of bureau score that I might give him a 1 lakh loan, but on the basis of his alternate data, I have strong confidence in him that I can now upgrade him to a 2 lakh sort of a loan, right? So those are also the sort of decisions that an alternate data can provide you. It will definitely give you a lot of edge case approvals. So the ones that you would have definitely said or rejected previously, you would be able to then get them into the fold and then say, hey, you know what, I will now have enough data about this customer that I'm confident of underwriting this customer. It can also be used, and currently a lot of my clients are actually using this data for post-loan monitoring as well, right? I'm sure a lot of people, a lot of the clients in the BFSI space do bureau scrubs, especially when the loan is provided to them. But they are also increasingly now using a lot of these alternate data-based signals to figure out whether this, I mean, I gave him a loan 6 months back, what is his financial profile today, and whether he will be able to repay the loan 6 months from now as well. Right? So those are the data points also that the alternate data signals can help you out with. Right? So, I mean, as an example, what are these alternate data signals that we are talking about, right? So if you look here, it can be on the basis of the mobile number, right? So we will be able to provide some amount of what is the age or vintage of that particular mobile number. Does the mobile number match with some of the KYC data that I have used for that customer? What is the validity of that mobile number, right? And all these data types and signals will definitely help me in terms of increasing the confidence of my clients to say, this guy is actually not a bad customer, you might want to look at him, right? Similarly, we also have certain device analytics, right? Some signals, some data types like device binding, transactional SMS, fraud signals that we could pick up from that device that the customer is using, and then use that to build a model saying that you can now underwrite this customer. Of course, we take a lot of financial statements from the customer, which will again tell them in terms of how healthy the financial profile of that customer is. You could actually get a lot of details around the email that the customer is using, what is the vintage of the email, what domain type it is, right? Whether he is giving you an accurate email where you could reach out to that particular customer in future, or whether it's a fraudulent email, things like that. And although it is at the last, but that's one of the critical data points or data types that my clients use is the employment, right? So the mere fact that a bank or an NBFC knows that this customer is a salaried customer, it just bumps him to a different level of riskiness or a low riskiness profile for them. And then they start giving these customers a preferential treatment, right? So these are some of the examples. I mean, the list is very exhaustive, but these are just some of the examples that we've just pointed out here in terms of what are all the various alternate data points that we do use, where we build models on top of these data signals and provide this to our clients. Just a note of caution here, whenever we use these alternate data signals, it's all done definitely with the consent of the customer in place, right? Without the consent of the customer, we cannot even touch his data, right? So what is it that we recommend our clients? We don't ask our clients to replace their existing models. So that's not how alternate data models work. All we are trying to tell them is that you will have to use these alternate data models in conjunction with whatever models you are having right now. It could be a bureau-based model and things like that, right? So what we always tell them is enrich your underwriting models with alternate data, but just don't replace them, right? Finally, this is something that I just wanted to quickly focus on. So we've just recently worked on this alternate risk module, where we take a lot of customer details in terms of some of the information that the customer has already provided to our clients. And we've built a risk module or a risk model on the basis of the information that the customer has provided us. Of course, with a consent layer there. And then we've come up with a score that ranges anywhere between 100 to 900, right? Similarly, mapping it to a bureau score where we say that any score above 730, 750 is a good score. Any score below 750 is kind of a risky score. You might want to put additional checks in place, right? So this is a alternate risk module solution that we've developed. We're doing a lot of POCs currently with some of the large private sector banks as we speak today. And it's also live with some of the large enterprise level NBFCs today. Yeah, that's